Okay, so let's talk about Tesla. Is its stock a rocket ship about to launch, or is it a car wreck waiting to happen? Because right now, the technical data, it's telling two completely different stories. Today, we're going to decode exactly what that means. All right, so let's just dive right in. On one hand, you've got all these signals just flashing bright green, right? Pointing to this strong upward path. But then on the other hand, you've got these warning signs blinking red, basically screaming, be careful. So which one is it? Which story is the real one? So yeah, we're going to have to put on our detective hats for this one and really investigate both sides of the case. First up, we'll follow the clues that make up the optimistic, the bullish argument. Then we're going to flip it and examine all the evidence that points to a more cautious or bearish conclusion. And hopefully by the end, we'll figure out where the data is really pointing. Okay, let's kick things off with the good news. What is it exactly that has the bulls so fired up about Tesla right now? So, our first piece of evidence, it's a simple but, man, is it a powerful number, 2.85. That's the risk-reward ratio. And all that really means is it's a way to measure if the potential reward is worth the potential risk. And a number like this, well, it's suggesting that for every single dollar you might risk, the potential reward is almost $3. For pretty much any investor, that's a really attractive place to start. And what's really interesting here is that the whole bullish case, it's built on a pretty solid foundation. You've got the big picture trends still pointing up, the price is staying above those key long-term levels, and the volume data, it looks like more people are buying in than selling out. But the real kicker, the thing that really gets your attention, is that last point. The idea that the stock might actually be undervalued right now. To get that, we need to dig just a little bit deeper. Okay, so to really wrap our heads around this whole undervalued idea, we need to talk about a tool called linear regression. Now, I know, it sounds super technical, but it's actually a pretty simple idea. All it is a fancy way of drawing the best possible straight line through all the squiggles of a stock's price history. And that line, well, that shows you where the real underlying trend is heading. And here it is. This is really the heart of the bullish argument. Based on that long-term trend line we just talked about, the model predicts Tesla's price should be somewhere around 476, but it's actually trading closer to 429. That suggests it could be almost 10% undervalued compared to where its own trend says it ought to be. That is a huge gap, and it's a massive reason why the bulls are feeling so good right now. All right, so the long-term picture, it's looking pretty rosy for the bulls, but that's only half the story, right? What about the bears? Let's flip the script now and take a look at the warning signs that have them feeling so cautious. And boom, this is where the conflict really starts to heat up. Because while that long-term trend is looking all positive and shiny, the short-term data is painting a completely different picture. We're talking recent weakness and momentum that just seems to be fading away. This table just lays out the conflict perfectly. Take a look at the 20-day average. That's a key short-term trend line. It is way above the current price, which is a classic sign of recent weakness. But then, look at the 200-day average, the long-term trend. It's far below the price, which confirms that underlying strength. It's literally like the stock is caught in a massive tug-of-war between the bulls and the bears. So to dig a little deeper into this whole short-term weakness thing, let's look at a super popular momentum indicator. It's called the MACD. And its job is really simple. It's designed to tell us if a trend is gaining steam or losing it. And, well, right now, the MACD is flashing a pretty clear warning sign. See that negative number for the histogram? That is a classic bearish signal. Going back to our tug-of-war analogy, it means the short-term downward pull is actually stronger than the upward pull right now. It really looks like the stock is losing steam, at least for the moment. Okay, so we've heard from Team Bull, we've heard from Team Bear, but what about all the data that's just kind of sitting on the fence? Let's take a look at the neutral signals now. Yeah, you can basically think of these indicators as the undecided voters in this whole investigation. The RSI, that's a momentum gauge, it's sitting smack dab in the middle. Not overbought, not oversold, just neutral. Then there's the ADX, which measures how strong a trend is, and it's super low, telling us the current trend is really weak. And the overall technical score, it's kind of a big meh. The market, it seems, just can't make up its mind. So we've looked at the evidence for the bulls, the bears, and the undecideds. So what's the final verdict? Where do we go from here? Let's lay out the most likely paths forward.
Okay, so it really all boils down to three possible scenarios, and they all depend on two absolutely critical price levels. You've got resistance and support. If the price can break above that 438 resistance level, it's pretty likely the bulls are back in control. But if it falls below the 421 support level, the bears probably take over. And if it just gets stuck in between those two, well, we're probably in for a lot more of this sideways, choppy action.
So the big question is, what are the odds? Well, just look at this. It is basically a statistical dead heat. The bullish scenario has about a 35% chance of playing out, and the bearish scenario, also a 35% chance. The neutral, sideways case is right there at 30%. I mean, you really cannot get much more evenly split than that. It's a total toss-up. And that really brings us to the big takeaway from our whole investigation. After looking at all the evidence, the signals for Tesla are, well, they're a total mixed bag. There is just no single clear story being told by the data right at this moment. So think about it. The long-term trend is bullish, but the short-term momentum is bearish, and the odds are basically a coin flip. The data isn't giving us an easy answer here. So the real question it leaves us with is this. In a battle between long-term hope and short-term fear, which side do you think is going to win?